Well, this certainly slipped under my radar. This is the Breedon Group. Shout out to Simon for the suggestion. If any of you have suggestions for future videos, be sure to hit me up on Discord and the comments section. Always love to hear any companies you want me to have a look into. This one is really intriguing. It's along the lines of Ibstock and Marshalls, but to me it seems that it has actually a far better long-term outlook than the other two. Now, last price, 71 pence a share. Ticker symbol BREE, easy to remember. Market cap of 1.2 billion. So it's actually not that far behind the Ibstock. So don't know why I called it the Ibstock, but it is what it is. Down 9% in the last year. Lows there of about 51 pence back in October, December time. Seems to have actually recovered a wee bit. Now, it's pretty decent value. Pretty decent dividend, pretty decent health, and pretty decent past performance. Doesn't score well in future growth, but then again, with the housing market the way it is, and a lot of other interest rates, and there's so much in the current economic climate not going too well for construction materials, but they will always be needed. A very difficult company. You're talking about a moat. This is an industry of a moat because we're going to continue, using all these materials. Okay. So, let's get into the nitty-gritty. Trading at 30% below its fair value. Earnings have grown 11.9% over the last 5 years. Analysts are in good agreement it'll rise by nearly 23.7%. Earnings are forecast to decline by nearly nothing over the next 3 years. I mean, that's pretty good going given the state of the industry at the moment. It has an unstable dividend track record, but it's a rather fresh one, so we'll give it a pass on that. When it comes to its competitors, we have Marshalls and Ibstock and Forterra all at the front, as well as this company that I'm not too sure of. I must look into them. Okay, down to price and history performance. Now, again, Simply Wall Street provides you with a lot of decent tools to have a wee look at charts like this. The green, dividend increases, guidance updates, earnings updates, management strategy. Now, I want to pull this out to the last 3 years. I want to see COVID. What happened back then? Well, we'll actually have to bring it out to 5 years to see that. Okay. So it was trading at a height of nearly £1 back in, actually exactly £1 in February 2020, dropping down to April. I always find it fascinating just to see how a company reacted over COVID. It came to an all-time high back in July 2021, everything reopening, everyone getting back to work. It's had a slow decline, certainly, of nearly 50% from 2021 to 2022. Some people may see that as too volatile for them. For me, it smells of opportunity. Okay, let's go down to any news. They seem to use debt quite sensibly. Remember, some of these could be generated, so, take them with a pinch of salt. As well as the discounted cash flow models later on. Just forewarning, I love to keep you all as right as I can. 7 days is down 3%, basic materials down 4%. Now, in the last year, the industry is actually up 17%. Unfortunately, Bree haven't joined that at minus 9.1 again. Opportunity, methinks I'll have to look into it. It's actually a surprisingly low volatility industry. Didn't think that, but there we go. Read more. Okay. Founded in 07, 3,700 employees. Rob Wood. So it's actually a fairly new company. They engage, as was said, about quarrying and manufacturing of construction materials. They offer various aggregates, such as crushed rock, high polished stone, sand, gravel, self-binding gravels. You get the idea here. We go on down. Their products are for motorways, airport infrastructure, driveways, footpaths, farm roads. You get the gist of it. In addition, they offer concrete for reconstructed stone walling and blocks, Portland cement, as well as road service and maintenance products. It provides traffic management services as well. Oh, it's a group. You're getting a couple of companies for the price of one. It's great. Formerly known as Breedon Aggregates, changed its name, as they sort of consolidated then in 2016. Pay ratio 10.6 and price to sales of 0.9. Not bad. December 31st was its last earnings report. I imagine the next one will probably be August or so. It says NA, but I imagine so. Earnings per share, you can see that of 0.066. Gross margin 34%, net profit 8%, debt to equity of 24%. Okay, that's not bad. Yield 3%. So it is about 2% lower than Ibstock. Ibstock sits at about 5.1. Its payout ratio is similar to Ibstock at about 30%, 32%. So why does it get more of a thumbs up than Ibstock? We'll see in a wee second. Valuation, first up, 4 out of 6. We can see here that they're a wee bit higher than Ibstock, a lot lower than Marshall's though, and a wee bit higher than Forterra. If we swap it over to forward PE, they become a wee bit more competitive in that round. I think the competitors are, apart from whoever they are, RHI Magneseta, apart from them, because I don't actually know who they are, the other competitors pretty decent. They're a little higher than the industry average, but again, not the biggest problem in the world. Slightly higher than their fair PE. Again, not my biggest concern, but they are 30% undervalued on a discounted cash flow model based on future cash flows. Now, again, grain of salt, it's just a model, just like intrinsic value and all the other ones that you can use in the internet. This just so happens to be the one that Simply Wall Street provides you with. Still, not a bad thing. Analysts are in good agreement it'll go up. Yeah, analysts, that's something I always just, I kind of skip over because I want to look at all the other fundamentals of the business and not what a group of people decided on. Because if they were always right or they were really, really good, then, they would just be beating the market all the time. Not to hate on analysts, but let's face it, it's not like anyone really knows what's going to happen in the next 6 months, 12 months, down the line, especially with the economy. Anyway, we're getting sidetracked. Back to earnings and revenue growth forecast. You can see pretty decent. Revenue of 1.39 billion. So they have a higher revenue, lower earnings compared to Ibstock, just the way their profit margins work. Again, slightly different industries. The Breedon Group seems to be, two other companies that Ibstock aren't really covering. Maybe they're a bit more specialized. I must actually compare them both more in depth. Free cash flow of about 61 million. Down to past performance, how were they doing? Well, back in 2016, 320 million in revenue and 27 million in earnings. As of today, 1.3 billion and 112 million in earnings. That is a fair 4 times for both. Operating expenses, they're gradually growing, probably up a good bit in the last 12 months, but we'll have to see. High quality earnings as well. Oh, nice. Okay, financial health, again another really good selling point for them, for me. Short-term liabilities, 415 million against 284 million in short-term liabilities. Assets, 1.37 billion to 457 million in long-term liabilities. Amazing. Their debt-to-equity ratio, again, they appear to be reducing their debt over time. Not so much in the last 5 years, but they have gradually been growing their equity against it as well. Throw in cash and equivalents of 101 million, the gap closes significantly again. Their debt's well covered by operating cash flow at 67.2% and 14.4 times coverage. Amazing to see. Balance sheet, you can see all the, what it's made up of. Cash, they've cash on hand, physical assets, long-term investments, receivables, and a few other inventory as well. Now, dividend, again, another very intriguing thing to see. 3% and a 32% payout ratio, but they have been growing their dividend per share. It dipped a wee bit in 2022, but it's forecast. If the forecast is correct, again, I'm relying on analysts, but if it is correct, then this could potentially be a really decent pickup, nearing 4.2% yield by 2025. Again, sometimes I do, in fact, like to see the sort of future of things, and they appear to only have started paying a dividend in 2021. Either there's no data before that, or more likely they actually just started in 2021 at 1%, jumping to 3%, and now hovering just at 3 on the dot, which is bang on the industry average. Again, Ibstock beats the industry average. Again, by about 2%, but it is forecast to grow in the next 3 years. Cash pay earnings payout, brilliant, nothing. Good bit of earnings retained and cash flow retained. Management, Rob Wood has been in the job for 2 years, 1.7 million compensation. You can see company earnings have continued to grow under his leadership. A wee bit of a dip again, well, over COVID. That can be forgiven for most CEOs. It's very hard to, overcome something like that. The board and leadership team, all right in terms of experience. They want 3 years, so give it a month, and this average tenure will be 3. So again, not bad. Ownership. Oh, who's that? Someone bought 4.8 million. Abacad Holding. Another 4 million. Okay, that must mean they're a top shareholder at this stage. They are. Institutions at 59.9%. Okay, see if there's any familiar faces around here. We've got Abacad Holding Limited. I don't know who they are. I must have a look. Lansdowne, Octopus Investments. Haven't seen Octopus in a while. BlackRock Inc. is actually down at 4th. And surprisingly, could it be there's no Vanguard? Wow, that's... I must say, it's rare. There's unicorn asset management. You don't see that much. I had to try that humour. Old dad joke to throw in. The Soros Fund Management are some mad holding companies when you really dig into it, investment firms. But yes, let's see, employees. They've been growing. They're about 3.7k employees as of now, and 1.69 billion in shares outstanding. Construction materials is their industry. They are traded in the AIM, the alternative investment market, as opposed to the London Stock Exchange. Could that change in the coming years? Possibly. That would be an interesting thing to point out. Breedon Quarry Derby seems to be their headquarters. Traded on the AIM as ordinary shares and on the Deutsche Börse AG. Hopefully I didn't butcher that. I haven't done my German in quite a while. I really like them. I actually do. I'm going to be completely biased about it. I've looked at all their metrics compared to... Now I'm comparing them to Ibstock and Marshalls. We're not going... they don't blow my socks off beyond the industries that I'm comparing them with. But they're still really good metrics. Very interesting. Again, cheers, Simon, for the suggestion on Discord. I appreciate it, man. And they might replace Ibstock. I'm going to have to do a wee dive between the two and look at a few things, but it's a possibility, Anyway, quick shell and Simply Wall Street, 40% off for the next 100 people that sign up. Using my code below, supports the channel, helps me, and 40% off is 40% off. I spend all day on this thing. I love Simply Wall Street. It's good crack. But yes, if you're as obsessive as me, it might be an opportunity. Anyway, let me know what you think of Breedon Group down in the comments. And if you have any other suggestions, throw them down there as well. See you all in the next one. Hank, you.